are midway through the trading week and time to see how the SEK crosses are performing. Henrik Unell, Senior FX Analyst at Nordea Markets, is on the phone with me now. Henrik, if we look firstly at the Swedish krona itself, the Central Bank of Sweden has remained unconcerned about the relative strength of the Swedish krona, as the currency is the seventh best performer of 2013 thus far. Both Nordbank and Riksbank are set to meet tomorrow, and while no action is anticipated, there has been much discussion that Norway's krone could fall to parity with the Swedish krona. Is this likely to favour the krona in your belief?
Parity in NOK certainly is a possibility, and we do have a forecast headed in that direction, although not quite reaching parity. One significant difference between the Bank of Norway and the Riksbank is the way it looks at its currency. While Norges Bank repeatedly have warned the capital from buying NOK, the Riksbank have done the opposite. It welcomes an appreciation of the SEK because in general it thinks that the Swedish economy can handle it. And like you say, nothing sensational is expected to come out of the monetary policy meetings in Norway and Sweden. Unchanged rates and unchanged guidance is expected from us and the market, and it should be NOK/SEK neutral. Although, if you look at the Norwegian economy, I think it's more of a mixed bag of signals. So perhaps the case for surprises is tilted towards Bank of Norway being a bit more concerned regarding the weaker economy and, on the margin, falling house prices. But when we look at the NOK, it should be remembered that the normal drivers are not in place at the moment. Of course, the carry trade is not so hot topic this year, and that is not beneficial to the Scandi currencies. And on the margin, you have a worse outlook in the Norwegian economy as well. But does that really motivate Euro-NOK trading towards 8.15, 8.20? We don't really think so. The normal drivers in terms of oil price, rate spreads, etc., should bring Euro-NOK down a bit. But your question, the case for parity, it could be defined as the Swedish economy gaining strength and momentum, and at some point a hike will be priced in, and the Norwegian economy being a little bit out of sync with that momentum. And on top of that, depreciation in the housing market. And that, of course, lead to low for longer Bank of Norway and elevated rate spreads between Norway and Sweden.
The Euro-SEK has struggled to gain traction in recent weeks, following weak production stats and, as a Danske Bank report highlights, the low for longer case. How do you see this pair performing over the short, mid and long-term period? And is this indicative of a more negative outlook for Sweden?
Yes, you're totally right in saying that the Swedish real economy have not gained traction in the sense that we had anticipated, and that certainly has been one reason for the performance of the SEK. But my answer to that is that better macro statistics will be coming. Sweden have underperformed Europe in terms of macro for a long time, but that will change in the next couple of months. We will have stronger real data coming out of Sweden, which will be more in line with indicators, and that should give a case for a stronger SEK, stronger than today's spot price around 8.80, and that's sort of in the short run. At some point, preferably around springtime, the market will start to discount a first hike from the Riksbank, and we still think that is a possibility already in April 2014, because with credit growth and housing prices being a real hot potato for our central bank, and prices and credit should remain elevated, that will be a factor in the Riksbank's decision-making. And for the decision in April next year, they will not just take into consideration cyclical indicators. And therefore, we see a possibility of an even stronger SEK in the first half of next year, around 8.20 to 8.30. And in my general view is that as long as we have weak global growth and central bank action coming from stability concerns, I think that the SEK will prosper in that environment.
US dollar SEK performance has been closely tied to FOMC policy in recent months. But how are discussions of delayed tapering likely to play out on this pair?
My view of the dollar story today, I should add, is as follows. Like I said, the Western world suffers from low capacity utilization and low growth. So therefore, relative competitiveness is very important in this environment. And the USA, they want its labor market to become healthier and to grow. And if the dollar is too strong, the credit growth that they derive from low rates and lots of QE and the demand from that stimulus, that it will land elsewhere. So I think that the U.S. will continue to sort of trash their currency while Europe and the ECB is focused on actually non-currency issues. What Europe is focused on is budget deficits, capital ratios with banks and so forth, and they are really only concerned with the survival of the euro, not its price. So I would say it's a matter of political approach where the dollar will continue to be under sell pressure, also against the SEK, I would say.
And lastly, Henrik, in the wake of the US shutdown debacle, the pound sterling has been one of the stronger performers, appreciating against several major currencies. For you, what are the present drivers for the pound sterling SEK, and what are your pricing forecasts for this pair?
Finally, I would say that pound devaluation and funding for lending and other Marshall-like policy measures are kicking in, and we will probably see that translating into really strong GDP numbers coming from the UK in the third quarter. So rising house prices and final demand is actually boosting growth, but we think that the speed of all that will slow around this corner in this present quarter. And also, I would say that the abuse of the printing press have pushed Bank of England's balance sheet in relation to GDP to high levels. And I would say that past performance in terms of monetary policy behavior will guide the future. In terms of what Carney and Bank of England, I think they are more prone to aggressive monetary policy should activity slow, and I think that they will quite comfortably position themselves behind the curves, sort of expect hikes to come later rather than sooner. So therefore we have a sterling SEK forecast around 10 and below, and that of course is generated because we have a rather aggressive forecast in terms of euro SEK.
Henrik, thank you very much. For all the latest price action on your favourite trading pairs, click back to Dukascopy TV. For now though, it's goodbye from me.